record button. Yeah, so welcome everyone, those who are going to watch this later, and also thank you, Joe, for coming in today. We're going to be covering about big market players and small traders in crypto or market players. And of course, especially the three ways big players in particular in crypto are disrupting the market. So it's exactly 10:03, so perhaps we'll start in the next 2 minutes. That is exactly at 10:05. I know most people are Saturday morning, so I believe most people would be maybe not getting ready for the day. But of course, as always, we have to present this session at 10 a.m. every Saturday. It's being recorded. We're going to upload it on the YouTube channel later today. But the key focus area of the topic today is three ways really how big Bitcoin players are affecting the crypto markets in general. So as I said, I'm recording this session, and we're going to be looking at the three big ways big players disrupt the market as it is, of course, compared to the existing market, the traditional markets. So Lawrence is not with us today, but of course he won't be able to take us to the news. I'll be doing it, but nonetheless, let's jump right in. It's at 10:05 right now. So let me share my screen right away. Just a moment. Share screen. There we go. Yeah. So let me put it on full view. Okay, so the topic for today, as you can see over there, is big market players versus small traders in crypto. Usually, either of them are the ones who are moving the market, or rather causing price movements and also adoption of cryptocurrencies in general as we go by. So, starting right there, as in any asset class, large individual holders and large institutional holders can and do allocate and do collude to manipulate price. That is as per somebody called Ari Paul, a co-founder of a company called Black Tau, which is it's a crypto focused investment company. So he says in cryptocurrency, such manipulation is extreme because of the youth of these markets and the speculative nature of the asset. That is of the assets. That is what he says, end of quote. So there's an image I'm going to show you that actually captures the entire crypto ecosystem in terms of adoption, in terms of price, in terms of basically people who hold the most amount of Bitcoins. So only a seasoned trader knows everything that lies under the cryptocurrency ocean, because we take this example to equate like the ocean. I mean, the ocean is very vast. We have big numbers of life that lives under the ocean. So it was shared by a company called Alteum. It's a company, of course, that also focuses on crypto research and analysis. So this is a diagram. So it basically shows the cryptocurrency ecosystem. So the biggest, or rather, like in the well, like in the ocean, whales are the biggest kind of organisms that live in the ocean. So also in the cryptocurrency ecosystem, we have people who are called whales, and whales are basically people who hold the largest amount of Bitcoins. And I'm going to be breaking down in terms of numbers. Then we come to people we call sharks. So for sharks, has a great sense of smell for profits and the aggressiveness to get what he wants. So think of that in terms of the crypto ecosystem. Well, if I maybe read on that, the wealthiest and the most experienced in the ocean. He knows all the sea from the surface to the depths. Moving forward, dolphin, that is number 3. He's smart, skilled with investments, always jumping into good business. So that's just analogy of the ocean compared to the cryptocurrency ecosystem. And number 4, we have the fish. He's aware that strength lies in the shoal and the volume. I think these were now most small investors, traders now start to line up. Then number 5, we have what we call octopuses. He knows that one coin is not enough, especially if you have a lot of tentacles. So these are people like invested in very many projects, so they keep accumulating, and of course they usually fall again at the lower part of the whole chart ecosystem. Then the second last, crab, he fights fiercely for what he wants and doesn't back down when it comes to winning. So that's another example we can use to compare with the cryptocurrency ecosystem. And then the lowest part of the food chain is what we call shrimp. The smallest one in the cryptocurrency amounts with amount of potential to grow. So these are people who hold the least amount of cryptocurrencies, in this case, Bitcoin. So with that in mind, let's now look at into details the three big ways that big players who are now the whales, the sharks, and the dolphin. That's how these are the three biggest players, and of course, any movements that they execute, it affects the whole market as a whole. So in numbers, this is where now you can look at the numbers. So a humpback, which is a kind of a whale, is somebody who has more than 5,000 bitcoins in his or her holdings. A whale is basically a person who has at least 1,000 plus bitcoins. That is what a whale means. A shark is somebody who has at least 500 to 100 bitcoins in his holding. A dolphin is somebody who has at least 100 to 500 bitcoins in their holdings. So the first four, basically, you can term them as the big guys in the crypto in the Bitcoin ecosystem. Because anytime they sell or they buy a large amount of cryptocurrencies, it causes a ripple in the ocean of cryptocurrencies. So the fish, octopus, crab, and ship, these are now the lower part of the system, whereby you now have traders, small traders, you have small investors, which the most majority of people actually fall under these four tiers. So this was shared by a company called Crypto Maniacs. That is what. So in detail, small trader and small investors only track addresses with large holdings online. So with blockchain, of course, you can able to track and see these addresses, how they move around the bitcoins. And of course, after that, they start heated conversation on the market moves on Reddit, forums, Twitter, etc. That is how they normally operate. You hear people talking about prices in all sorts of opinion. I mean, I think we've been seeing this since Bitcoin started trading. And I think even in the news, I'm going to be sharing part of what that news comes about. So they are ultimately in the dark on the whales, plans, and motives, because the plans, the whales and these kind of big institutional investors, for them, it's basically, so welcome, Ronald. For these big whales and institutions, they cause a very big price movement when they sell. So moving forward, the top 100 Bitcoin addresses control 17.3% of all issued Bitcoin, that is cryptocurrency. This means top 100 addresses control a substantial part of the supply. So that tells you how important, or rather what a very paramount position these whales hold. So remember, this is not any different than what happens in the established markets. These are the traditional markets, like on the Wall Street. Even in Kenya, we can talk about the NSE, whereby you have big amount of people holding, or rather owning, the biggest amount of shares of a company. And of course, anytime they sell or they buy more of it, of course, it normally causes a stir in terms of the price movements. So what are the three ways that these big Bitcoin players or owners can disrupt the market in general? So the number one way is that market concentration means big trades. Market concentration means big trades. So whenever a big mutual fund or investment bank or even Warren Buffett trades a big block of stock, they have to file a form with the Securities Exchange Commission. These ones, the rest of the trading world, because market, of course, hate big surprises. This is where now like regulations normally comes in. Even right here in Kenya, within the NSE, when somebody is buying a big amount of, or rather selling, or even investing in a big amount of of a company-related product, they of course have to file their notice with the CMA, of course, for publicity. That is one of the requirements of the NSE. So on cryptocurrency, of course, I can say what they are. Currently, there are no such rules for cryptocurrency traders and investment, so to say. So as mentioned, only 100 Bitcoin addresses control 20% of the market. This is huge for such a small market. That's the huge share. If they decide to dump, that means if they decide to sell at once, Bitcoin, of course, these wells are going to only add what? Volatility. You're going to see a lot of price movements in terms of changes. So that is what I mean when I say when there is a little concentration by the big wells. So this means the most very few addresses owns the most amount of Bitcoin. So that means it is a concentrated angle. So here is another analogy again. What if the trading desk of, let's say, Bank of America, Citibank, Goldman, all decide to sell off their Apple holdings? It is highly unlikely, of course, but a similar impact could be felt in the Bitcoin market, meaning big institutions, big wells, when they sell Bitcoins all at once, that is going to be felt in the market because the market is still young. The reason number two, or rather the way number two, is that the spillover effect could mess up other markets. So suppose a big wealthy bank or two amasses a position in Bitcoin. So they buy a big amount of Bitcoin all at once, and then again they decide to dump it all at once. So it doesn't have to tell any market regulator. So it just unloads it. Meaning, because of the way the market is still very young, somebody can buy whatever amount of Bitcoins, and then they can decide to sell it at the same time. So this is now one of the challenges that we have within the cryptocurrency ecosystem. So that spillover is normally what affects that's why most people basically don't like cryptocurrencies, because it's too volatile. So the current market regulation system only oversees stocks, bonds, and derivatives. That is what where we are. Cryptocurrencies are now on the radar. As you can see, there is a lot of top of regulations all across the world. It may take months or years to catch up, but now in the interim, until that is set, of course, you're going to be seeing a lot of price movement up and down, which if you don't know, you just have to take a long-term approach. So just like tulips and the .com shares before them, cryptocurrencies, the only blockchain technology currently operating at the largest scale. So that is why we're going to see this happening more and more. Point number three, of course, I don't know whether you watched this movie called Big Shot. It's a very nice movie for you if you want to actually get into cryptocurrency or rather any form of investment. You see how big players normally play with the stock exchange, or rather the Wall Street in this case. So with future sponsor trading, you can of course now play Bitcoin. That is now, remember recently the Bitcoin ETF were approved. So now there's a chance now that people can take a shot on Bitcoin is going down. So I'm going to explain that shortly. So as you can see over there, although most people who buy the cryptocurrency are long, meaning they are holding Bitcoin, or rather they are buying Bitcoin for the long term, expectation of price to grow higher. So one can also make money if it loses value. So that is what now we call shorting, and that this now entitles you, or rather requires you to do a lot of reading. It's not for everyone. But what if a number of big players decide to short the cryptocurrency at the same time? Meaning they all decided to sell, to take a bet that the price is going down at the same time. So this could trigger a massive decline. The virtual currency is under no direct market regulation. So there are no rules against this move as we speak right now. So point to note, most short sellers know that when the price falls like a rock, they buy in at the lower price and make money on the upswing. That is one thing that everybody needs to understand. You need to know how these people are basically operating. But this is if you are a big investor. So just Keria, we know if you have any questions, just drop it in the chat. I'll be talking about answering them at the end of the session, any form of a question that you may have within, of course, the cryptocurrency ecosystem. So as you are continuing, we were looking at 3 ways in which big Bitcoin players, of course, disrupt the market. Number 1, we spoke about the fact that market concentration means big trades, because very few people hold the most amount of Bitcoins. And of course, when there is a small shake, of course, price normally gets disrupted. Point number 2 is that the same spillover effect could mess up other markets, meaning that we get to experience a lot of volatility because of that spillover. Meaning, when somebody sells, they sell all at once. So, of course, the other one is that the shorts, meaning this is number 3. When people sell at the same time, rather bets at the price going lower, all of price will actually go beyond the expected limits. So when and how this will happen is uncertain. That is now what we're talking about. But it happens countless times in the past, from short selling railroad stocks in 1880s. You can imagine way back in 1880s, people used to buy long and sell short. To a handful of traders shorting mortgage securities, I think the recent one was in 2008. And this is the time most people made the biggest amount of money, and most people lost the biggest amount of money. That is what, unfortunately, the ones who lost was the other part of what you're talking about. The small traders, small investors, and the companies are the ones who lost the most amount of money. But the big market players are the ones who made money during that 2008 financial meltdown. It's a time-honored practice, and it will happen again for sure. That is what we know. So, in conclusion, this particular diagram shows what I was telling earlier. Big market players are the ones who basically takes all the trades. These small traders, of course, they put stop losses. They basically bet on the short-term price movement, and when such a correction happens, they are the ones who buy it, and then the price normally resumes the uptrend, and that's how people usually lose money. So, in summary, it is not illegal for big holders of some cryptocurrencies to discuss trading with one another. Of course, this puts small buyers, traders at a disadvantage, and that is what we've been experiencing all through and through. The crypto ecosystem is still in its infancy stage, with a long runaway for growth. Of course, we are yet to see a lot of money coming into the cryptocurrency ecosystem. Of course, not forgetting the volatility. So just like in the technology sector, big market players keep getting bigger, and the small ones are often get acquired or get crushed. So it's up to you now to know which is your play. How to make use of this is that one needs to have a long-term view. One needs to have a long-term view. You need to think of long-term. So I'm going to be sharing this particular link for our Telegram channel, whereby you can be able to follow everyday updates on the cryptocurrency system, and of course to guide you how to play this, so you're not you don't suffer the problems of being a small trader or a small investor. So of course you need to get into the bigger players market. So that of course summarizes my session today. We are looking at the three points or rather the ecosystem of how big market players normally disrupt the entire cryptocurrency ecosystem. And we talked about the whales, the shark, the dolphins, the fish, of course, and everybody else within the crypto ecosystem. And of course, who is a whale? The dolphin, shark, whale, and humpback. These are the top tier of people who hold the most amount of Bitcoins, leaving now the fish, all that as now the small traders and investors within the crypto ecosystem. So that is basically what I had for you today. Let me see if there's any question in the chat. Let me see if there's a question in the chat. So just type in any question that you have. I'll be able to answer it as we come to the end of the session today. So to the news now, let's look at what was the most exciting news of the week today, or rather in the week. I'll start with the one from, of course, we talked about the number of addresses, the number of bitcoins that are held all across the globe. So you can see over there, the first news is that Bitcoin network's activity raises an active address hold above 1 million for the 5th day. So Bitcoin daily active addresses count has historically been a reliable indicator of the digital assets prospective price movement, with the price of BTC traditionally rising due to an interest in the total number of addresses interacting in the network. So interestingly, for the 5th day in a row, that is the week ending today, the number of active addresses on the Bitcoin network exceeded 1 million, according to blockchain analyst firm Sentiment. Indeed, the chain analytics perform commonly used by crypto traders, you see, for historical balances, said emerging and emerging trends. So that is what, as I said earlier, people look at the number of how these big addresses are moving, and the number of total addresses that are within the crypto network, as to expect, or rather to plan for price movement. The second news, which is actually quite exciting, I think I shared was it on Thursday? New York Mayor Eric Adams, who's been elected on Tuesday, says he will take the first 3 paychecks in Bitcoin. That is very powerful, and that is going to be, of course, talk for this week within the crypto ecosystem. So with this news, Adam joins Miami Mayor Francis Suarez, who said on Tuesday he will take his next paycheck in Bitcoin. So while New York is synonymously with being the headquarters of TradFi, it has some competition in the area of digital assets. This to show how serious he is about attracting blockchain and crypto companies to New York. The newly elected mayor, Eric Adams, pleaded to take his first 3 paychecks in Bitcoin. I think that is a serious statement, and it's going to be, of course, instill confidence within the crypto ecosystem. Moving on, Jeffries Woods sells more gold for Bitcoin. So who is Jeffries Woods? As you can see over there, Christopher Hood, global head of equity strategy at multinational financial services firm Jeffries Group, has reduced exposure of gold in his Asia ex-Japan portfolio by 5% in favor of Bitcoin business salary reports. So this appears to be the first sign that the yellow metal is losing its luster as a hedge against inflation. So look at this point. Jeffries, which has 440 billion worth of assets under management, trimmed its exposure to gold for the first time in many years back in December in order to dip its toes on the largest cryptocurrency. So that is amazing. And of course, now look at this. It made 5% allocation of Bitcoin when the price of the latest cryptocurrency was roughly at $22,000. That's at 2.2 million. Today, the price is at 6.2 million. You see how these guys are playing it out. In December, I think they didn't mention. It's now that they're mentioning, and I think we mentioned this during our daily market thoughts, that most of these guys now will say that they bought Bitcoin later, which is now they're saying today. From that to date, I think that's a very that's what, almost 3 times their worth right now. Moving on, another podcast I normally follow a lot is called Joe Rogan. I'm sure most of us you'd know him. Joe Rogan reportedly accepts $100,000 BTC worth of for payment. So similar to the New York mayor, American podcast host Joe Rogan has agreed to be paid $100,000. That's 10 million in cash in Bitcoin. Rogan already signed a $100 million deal with Spotify. I think for those who like to listen to music online, Spotify is one of the good platforms to listen to music for exclusive rights to his podcast, but has now negotiated to be part paid in crypto as well. And that goes on to tell you that if you're ever in a position whereby somebody is able to give you an option to be paid in Bitcoin and cash, take that option. Don't refuse, because 2-3 years down the line, you will be grateful of that decision that you made. So you can see Rogan has been known as a cryptocurrency advocate since he had his audience of 200 million to buy Bitcoin and start stacking sats. So you can see he has over 200 million followers, or rather audience, and of course that is quite huge coming from him. Moving on, Russia crypto market worth 500 billion despite bad regulation, says executive. So many crypto exchanges with the Russian roots have fled the country or operate illegally, Blockchain Lives founder said. So the Russian cryptocurrency market has grown to hundreds of billions of dollars despite the absence of sufficient cryptocurrency regulation, according to a major industry executive. So Sergey Kistrov, founder of Russian cryptocurrency event Life and Listing, gave a keynote speech on the cryptocurrency regulation in Russia at the 7 Blockchain Life Forum in Moscow on Wednesday. He said, based on insights including local cash flows related to services like cryptocurrency mining, Kistrov estimated that cryptocurrency market could be worth 20 to 40 trillion rubles. That's about 280 to 550 billion dollars. I think that is quite huge, and I think I'll just leave it there. I don't want to read the whole story. Another story, interesting. I'm sure most of us, most people actually value Apple, the company, the Apple iPhones, and Steve Wozniak was one of the founders of that company. And now he says Bitcoin is mathematically purity. Bitcoin is mathematical purity. Sorry about that. Says the Apple co-founder Steve Wozniak. So Bitcoin is mathematical purity and impossible to be copied, say the Apple co-founder and unicorn hunter, cycle of money investor. So this is an interview that he did last month, October 29. He says, look at the dollar. We're quoting him. Look at the dollar. The government can just create new dollars and borrow. It's like you never have it fixed like Bitcoin. Wozniak told Brian Sozzi and Julie Heyman, Bitcoin is mathematical purity. There can never be another created. And this is why I think most billionaires, most institutional companies out there are looking at Bitcoin now on another perspective. Other news, Kazakhstan expects at least 1.5 billion in economic activity from crypto mining within 5 years. These are countries that took is encouraging people to rather cryptocurrency miners. These are people who basically verify transactions to set up their locations in the country. And as a country, Kazakhstan now says they'll be expecting $1.5 billion in economic activity. This is huge for any country. And of course, it ranks as number 2 in the world in terms of Bitcoin mining hash rate. Right now, US stays at number 1 in terms of Bitcoin mining hash rate because of course, 2 months ago, China banned most of the cryptocurrency mining activity within the country. Moving on, some other news as we almost come to the end of the session. MMA entertainment firm UFC to launch exclusive NFT series with Crypto.com. So I'm sure most people normally watch this UFC. It's one of the, I think, the most watched like shows. So on Tuesday, the digital asset exchange Crypto.com announced the launch of the first official Ultimate Fighting Champions UFC NFT collectibles. The new NFT series will feature UFC digital collectibles that showcase fight night artwork, event posters, championship belts, and athletes' profiles. So of course, there's a lot of money being moved around. You can see over there, the deal is worth $175 billion. That is what you can see over there. Moving on to other news, Africa leading retail size Bitcoin payments suggesting increasing adoption. I think this is good coming from Kenya. So the continent is fast becoming a hotspot for growing usage of Bitcoin for transactions on a day-to-day basis. So the key points are to note over here is that P2P platforms are the ones that actually drive Bitcoin adoption in Kenya and also Africa. P2P stands for peer-to-peer. That is what that means. And of course, Binance is one of the best platforms for peer-to-peer exchange. And of course, it is improving new users to come into the crypto ecosystem. South Africa, in this case, are the ones leading in terms of regulation. That is, again, one thing I wanted to make it known as per this article by BTC.com. So South Africa, of course, are the ones who are way ahead in terms of embracing regulations. Of course, I think Nigeria, Ghana, and Kenya, I think we are now following in line. Moving on to some other news, let me see over there. So crypto market in India and Pakistan soars 641% and 711 in 12 months. That is in 1 year. So I think I keep focusing so much on India and the Asia side because, of course, of the numbers, and of course they are known for the as you can see, for the crypto market in India strongest after the Middle East. India's digital payment giant may launch Bitcoin offering. So these are this is one of the continents to watch in terms of tech, and once they onboard Bitcoin in full swing, well, of course, we're going to see a lot of activity. So according to chain analysis, the crypto market in India and Pakistan is the strongest after majority of European countries, and the Middle East over the past 12 months. So this is going to be, I think, it's of course changing every day. It is improving every day. People are now, as you can see over there, so far, Bitcoin and regulation rules around it are in the gray area, according to the company CFO's Mudur Deora. But if the situation changes, PayTab, which is the company that is going to accept crypto offerings, will be now launching that in India. And you can see over there, this would be a massive step for crypto adoption in India. And this is one thing that you need to watch. If you follow our channel, we've been giving some recommendation of some particular crypto assets to basically get on board your portfolio if you so wish. So PayTime is the one that, of course, is going to be accepting payments, offering crypto-based payments in India. So moving forward to some other news, I think actually that was the last news of the day. I don't think we have any other news. So any question that you may have before we come to a close of the session, any question, we may take the last maybe 2 minutes or so that we can call it a day. So yes, any question? This is recorded. I'm going to be uploading it on the chat on the YouTube channel today, so you can at least come back later to review it. But of course, let's keep learning. Let's keep learning every day. Let's keep experiencing Bitcoin and cryptocurrencies. It's all about experiencing. Get that account from on the Binance P2P platform. Buy your Bitcoin. I mean, as I said, if you are in a company or you work in a place where they can offer you Bitcoin as a form of payment, please take up that offer. If you do online writing, if you do online any form of business online, especially overseas, and the company tells you that they can pay you part in Bitcoin, please don't refuse to take that offer. It's going to be valuable down the line. So any question before we come to a close? All right, so it seems we have no question. Thank you very much for attending this session, where we're going to be holding another session, of course, next Saturday at the same time. Keep following our I think let me post again the Telegram channel. If you have any form of clarity, any form of question, please ask. We're there to see you in this digitalization shift of this century. So thank you very much. How do I access this lesson? So let me see. Okay, I will post it on the YouTube channel, please. I'll post it on the YouTube channel. So thank you very much, and bye bye. Thank you, and have a blessed weekend ahead.